Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Welcome to today's Outlook. Firstly, we're going to start with the Asian markets. They were mixed early afternoon after a short-lived recovery, even as oil prices jumped and of course dollar weakened significantly. The Shanghai Composite, as we can see, is up 26 points or almost a full percent to 31.29, while of course the Shenzhen Composite was up about 0.6% or about 3 points higher. Japanese markets are shut for the Cultural Day public holiday today, and we saw the Nikkei 225 last closing 308 points in the negative territory, or about 1.8% at 17,135. That was yesterday. Federal Reserve's interest rate decision was unchanged at half a point in November, but of course they acknowledged that the case for a rate hike was getting stronger. The dollar's losses deepened on Thursday, as we mentioned, as of course positioning for next week's US presidential elections overshadowed the Federal Reserve's last review, while of course policymakers signaled that we're on track for rate hike next month. As we can see, the dollar yen fell about 0.4% or down to 102.88 from, of course, earlier gains over 104. That was last week. On Friday, the key U.S. non-farm payrolls report will be, of course, released and could reinforce or undermine those hike bets. Employers are expected to have added about 175,000 jobs in October. Of course, as we're tracking the European markets, they were mixed on Thursday morning on, of course, continued concerns over the US elections, with investors also focused on today Bank of England's latest rate decision and, of course, fresh corporate earnings. As we can see, the stock 600 is set 0.2% higher, or 0.7 points. As we can see, little changed so far, with bourses pointing in different directions. FTSE 100 up about 14.25 points or 0.2% higher. DAX, however, is 3.6 points down, or 0.03%. Looking at the euro versus the dollar, we can also see that it's little changed since the morning opening at 1.1095. Just about 0.01% higher after rising 0.6% as high as 1.1125. That was its highest since October 11. Sterling also remained higher versus the greenback, as we can see, 0.3% in the positive territory at 1.2338 at the moment, with of course gold, as we see, slightly declining as a safe haven demand from the bullion. And of course, we saw the dollar weakening. However, gold came a little bit under pressure here, probably on some profit taking. $9 decline since morning open, or about 0.8% to 12.9365, after climbing to 13.03 in the previous session. Non-farm payrolls on Friday, as we mentioned, and US elections on Tuesday remain in the focus and should provide plenty of opportunities. Crude oil futures rose on Thursday as an attack on Nigerian oil pipeline and, of course, weaker US dollar buoyed the sentiment in the market. As we can see, oil remained 0.5% higher since the morning open, at about 25 cents higher to 45.59 a barrel. The benchmark hit its lowest since late September, after data showed US crude stockpiles soared more than 14 million barrels last week. That was the biggest weekly build since the US Energy Information Administration started keeping records. That was back in 1982. And of course, the main focus today in the economic calendar is the Bank of England's interest rate decision and, of course, quarterly inflation report at 1200. Also, of course, later into the day, we will also see US weekly job data. And that's all from all the important news of today. I'll see you again next time. Bye-bye.